Hello and welcome to new episode of Insurance Mantra, your weekly guide to understand the world of insurance only on ET Now. In today's show, we deep dive into big questions shaping India's insurance landscape, the government decision to exempt GST on life and health insurance is being seen as a major relief for policyholders. But what will it really mean for affordability and penetration in India? And beyond policy changes, we look at the role of data and artificial intelligence, how global insurers are leveraging these technologies, and what Indian insurers can learn to improve efficiency, reduce costs, and make insurance more customer-friendly. To discuss all this and more, I am joined by a very special guest, Pallavi Malani, Managing Director and Partner at Boston Consultancy Group and lead of the Indian insurance practice. Pallavi, welcome to Insurance Mantra. It's a pleasure to have you with us today.
Thank you, Anurag, for having me over. It is my pleasure.
So, to begin with the latest development related to GST exemption, how do you see this in increasing affordability and increasing insurance penetration in India?
Actually, personally, I'm extremely excited about it, and I'll tell you why. I was speaking to an agent yesterday, and the agent said that, ma'am, when I have the ability to now go tell the customer that even a soap has 5% GST, even toothpaste has 5% GST, but insurance has been exempted, it sends a clear signal how critical this is. And then I was speaking to a few of our senior colleagues in the industry, and they resonated exactly that. So this is now finally the insurance mantra that the industry had been looking for to really go drive the awareness and penetration in the country. So I actually feel extremely, positive and enthusiastic about it. Having said that, of course, there is the whole ITC and how the insurers manage it. But I think it will force the industry to take a hard look at how we operate and make some structural changes.
Okay, so do you think that ITC issue is a big issue, and because of ITC, insurers won't be able to pass on the complete benefit of 18% to policyholders?
So I do think, Anurag, that ITC is a real issue and it will impact different insurers differently. Right now, all insurers are in the process of really creating the scenarios and knowing exactly what the impact will be. The impact will be higher on the standalone health insurers, and the impact will be slightly lower. But we do anticipate the impact to be anywhere between 4 to 7% for different insurers. Is it a margin squeeze? Yes, it is. Is it fatal? I don't think so. And there are different strategies that insurers can take to address it.
So what can be that strategies?
Yes, exactly. So firstly, there is a need for us to think through our distribution channels and the commission structure. So there could be some part of this margin squeeze that is also passed on to the distributors, and that can be easily made up because of the volumes that hopefully should come through because of this relief that the government has given. So net, it can be neutral for all parties and beneficial for the customer. Secondly, insurers will need to look at their cost structures, and how can we actually utilize a lot of AI digital data to make leaner cost structures, which can again absorb this margin impact. But of course, that's a slightly more medium-term view. It can't happen immediately. Third, the insurers, will have to maybe bear some of it. It will be a short-term margin hit that the insurers may need to take. But we are all hopeful that the industry will come together and make sure that the benefit is passed on to the end consumer. It leads to that volume uplift, which then overall takes India towards the penetration numbers that we keep talking about.
You want to say that with the use of technology and AI, that cost rationalization can happen. So means how long it will take if insurers start using AI and technology? So medium term will take at least 3-4 years?
No. Nothing in technology these days takes 3-4 years, and in that the technology itself evolves. Let me take 2 real examples to bring it to life. We spend about 10 to 12 rupees per minute of calling that the insurers do to customers to remind them of a renewal per minute. If you deploy AI bots technology, which is now easily available, we have seen that cost come down to 3 to 4 rupees per minute. It's a dramatic difference. And implementing that is not a matter of years, it's actually a matter of, months. So I'm saying that, it can be implemented in anywhere a range of 3 to 6 to 8 months. I mean, that's the kind of range we are talking about.
Is there any model where it got implemented and insurers got benefited and eventually policyholders got also the benefit of it?
Yes, absolutely. Globally, we have many examples where AI has been deployed both in terms of servicing as well as on the claim side, as well as on the distribution side. On the servicing side, we've seen a 30% impact in terms of manpower costs. In terms of distribution, we've seen a 20 to 30% uplift on productivity. And in terms of claims, it brings down about 3 to 4% of loss ratios, but also significantly reduces the claims adjudication cost, which in India is anywhere between 200 rupees to 300, 400 rupees, and can we bring that down to 15 to 20 rupees? That's the kind of range we're talking about. But Anurag, one important thing, while I'm giving you these as global numbers, actually we've already started seeing some of this impact happen in India itself.
Indian insurers are not generating adequate return on equity. So do you think it's a structural problem in Indian insurance sector, and how this can be addressed?
So let me first give you some numbers. The total shareholder returns over the last 5 years that listed Indian insurers have generated is actually 9% in comparison to global insurers who've generated it at 11 or 12%.
Okay.
So the shareholder return is a challenge. If I also look at market cap, our market cap growth from the calendar year 2022 to 2024 has been at about 14% in the insurance industry. The equivalent number in banking is also closer to 22%, and then there are other industries who've done very well. So structurally, if investors don't make money, pouring in of new capital will remain a challenge. So I do feel that while there have been many, many enabling regulations which have come over the last few years, which does protect the customer, some more work is still needed. It's the current GST norm solves for affordability, but some more work is needed on
what can
awareness.
Be on the regulatory front, or Insurance Act amendment front, or from IRDA? Means what more need to be done?
Yeah, I think it's a combination of things. But if you honestly ask me what really stops the consumer from taking an insurance policy today, there's just a lot of trust deficit when it comes to insurance. Okay. And I think creating the right environment, creating the right narrative, the positivity around insurance with just the awareness, I think will go a huge way. And I know this has been spoken about umpteen number of times, but unfortunately, I think we are still far away from it really creating that customer pull. In addition to that, I also feel that, there is a need for us to relook at distribution.
Okay.
We've had a traditional distribution model which has been agency-led and now with bank assurance for a very long time. But overall, as an industry in life insurance, we've only added 5% additional agents over the last few years. And on the general insurance side, 13% additional agents. I think there is a need to just relook at how we distribute insurance and how do we make it less distribution intensive. Okay. That will require product innovation, simplification of communication, and the customer pull to be able to create that momentum.
So my final question would be, before I let you go, according to you, what is the single most reason that insurance penetration in India is much below the global average?
I would de-average the problem. India operates in 3 parts. Okay. There is the top of the pyramid, affluent. There, the penetration is actually not that far behind the global numbers.
Yes.
Then we have the emerging segment, which is, at the lowest end. And there we do have government schemes, and a lot of push has been made by the government.
Ayushman Bharat scheme.
Yes, exactly.
Missing middle segment is still missing middle.
And which is where it's a problem of affordability, which gets solved at least partly with GST. But I think the other single biggest challenge is just the awareness. And I think once the awareness comes through,
so we will increase from at least in general insurance from 1% to at least 2% of GDP in next 5-7 years?
I would absolutely think so, because as per our estimates, the price elasticity of the change that has come with the GST should enable about a 1% plus increase in penetration. So we are very hopeful that that should happen.
Thank you so much, Pallavi, for those valuable insights, and time for a short break now. You shared your views about